Assalamualaikum warahmatullahi ta'ala wabarakatuh. I will divide this topic into 3 sections, and therefore there are 3 learning objectives on this topic. The first segment is to understand the structure of modern financial system, and we will see the position of Islamic finance in the system. The second segment is to revisit and to understand riba and to evaluate the danger of riba from an economic perspective. And then the last part, segment 3, is to look at the approach taken by Islamic banking and finance, including Islamic social finance, in addressing the issue of riba. One additional sub-segment that will be discussed in this topic, segment 3, is the emerging importance of Islamic social finance. And here we will look at how Islamic social finance is different than Islamic finance. We can define financial system as a system that consists of sets of institutional setup, rules and regulations that govern the flow of funds from the surplus spending unit or SSU to the deficit spending unit or DSU. This is the main function of the financial system, where the system works as the intermediary between the surplus spending unit. We can also consider the surplus spending unit and how the financial system would channel the surplus funds to the deficit spending unit. Those people without enough money, they may need to borrow from financial institution. So these are the deficit spending unit in the economy. And the position of financial system is in between of these two groups. Financial system, given that definition of financial system, there are various components of financial systems. To make a system, there are components in that system. Among the components are, number 1, the financial markets. Usually we discuss about capital markets and money markets. And I want you to go back and see the definition, what is capital markets and what is the money markets. These are 2 types of major financial markets. And then financial system also consists of financial institutions. In a modern banking system, one key institution is the central bank. Besides central bank, there are investment banks, commercial banks, companies. We also have Islamic banks today and takaful institutions among the examples of financial institution. Definitely, to govern the operations of financial activities, there must be rules and regulations that need to be in place in order to make sure financial activities are done in a coherent manners. In Malaysia, for example, we have the Banking Act. To govern the Islamic finance activities, we have the Islamic Services and Financial Act, or IFSA, IFSA 2013. This is the rules and regulations to govern financial activities. And then another component is the financial instruments. Among examples include under consumer bankings, saving accounts, investment accounts, credit cards, various types of personal loans such as personal loans, car loans, mortgage or housing loans, and others. Given all these components, the mission of commercial banks today, you can see that the current setup of Islamic finance more or less are similar to the modern conventional financial system. The only thing that we don't have at the moment is the Islamic Central Bank. below central bank. Central bank is based on the conventional banking model. But when we want to have the Islamic financial system today, all the Islamic financial institutions are actually under the central bank, which is not Islamic. This is the irony of how we, like in Malaysia or in many Muslim countries, set up our banking, set up our Islamic financial structures. I want to emphasize that we need to be aware of the scope of the terms. Financial system refers to the system involving all the components that I have mentioned earlier. Then be aware also with the term Islamic finance is much broader than Islamic banks. The reason why I mention this is because many of us tend to interchangeably use the terms, sometimes thinking that they are the same. Islamic bank is limited to the banking institutions. Therefore, all activities involving banking activities under Islamic bank, we can put under that. But when we say Islamic finance, this may include discussions about Islamic central bank, hopefully, discussions about Islamic investment, Islamic bank also included. Takaful can also be part of it. So be aware of the difference when you use the term Islamic finance and Islamic bank. Islamic finance is much broader compared to Islamic bank. As the intermediary in the economy, play the role to manage risk in the economy. Risk here involve managing flow of funds from the surplus spending unit to the deficit spending unit. Without the financial institutions such as banks, individuals who need money may need to find other individuals such as their family. And as individuals, we don't have information about other individuals. We do not know their income level, their risk profile, their default risk, and many other things. And when people want to borrow money from us today, perhaps if we are not sure, we don't really know the person, we may reject their applications or their requests for loan from us. Our society today tend to go to the financial institutions such as bank to get loans. And banks are in the business to channel funds, and why they are to understand the risk of these channeling funds, and therefore they can profit from these activities. So this is one big idea about how the financial institutions stand as the intermediary, and given the information that they have, they can manage risk in handling the channeling of funds in the economy. Besides that, financial institutions also provide liquidity into the economy. This is through various mechanisms that banks create liquidity through the checkable deposits. Expansion creates money. You learn in your principal economics that when banks give loans, this is a form of money creations. And when we repay our loans, this is a form of money destruction. This is one way how liquidity is provided in the economy. And besides providing services under consumer banking, banks also provide investment. Also is important in channeling savings for investment. This is usually done under, and in Malaysia, we have Maybank Investment or Bank Islam Investment as examples of investment bank. Investment bank usually handles banking activities related to corporations, businesses. They provide syndicated loans to corporations. They also function as the underwriters to corporations when companies want to public list their shares in the stock market. These are among the functions of financial institutions in handling investment activities. The structure of financial system. Now let us see the position of Islamic finance in the financial system that make Islamic finance very different than their conventional counterparts is the Sharia compliance requirements of the Islamic financial institutions to follow. In undertaking their operations, Islamic financial institutions must comply with the rules of the land where they operate. The Banking Act in Malaysia, for example, or for Islamic financial institutions, beside Banking Act, they also are subject to the Islamic Services and Financial Acts 2013 IFSA. Beside that, they also must operate following the Sharia requirements. And this Sharia requirement includes the legal aspect of Sharia and the ethical aspect of the Sharia. But obviously the prohibition of riba, this is one core prohibitions that Islamic financial institution must avoid. And the prohibition of riba is actually the reason why Muslim scholars and industry players established the Islamic financial institutions in order to avoid riba. Beside that, as an Islamic institutions, definitely the ethical components must also be observed. If you can recall, when we discuss about the Islamic producer behavior, Islamic firms, now we can think about Islamic bank, they can be a profit maximizing entity, but there are conditions that they must fulfill. And these conditions include to comply with Sharia requirements I mentioned earlier, prohibition of riba, need to be ethical, need to be fair and just. What more today people talk about green finance, ethical finance. These elements are actually implicit in the structure of operations of the Islamic financial institutions. This is not something new in the operations of Islamic financial institutions because their DNA should be based on this before they can talk about profits. The Islamic financial institutions also need to be competitive in the market. For their conventional counterparts, conventional financial institutions, they are only restricted by the man-made law. But now, the Islamic financial institutions are restricted by two laws, man-made law as well as the requirement to be Sharia compliance. And in order to be competitive, given more restrictions, this could be one challenge to the Islamic financial institutions. Another challenge facing Islamic financial institutions is the conventional financial institutions have dominated the financial sectors much earlier. The first bank in Malaysia was Standard Chartered Bank, had been in Malaysia even before the independence of the country in 1957. Standard Chartered had been in operations much earlier. The first Islamic bank was established in 1983. That is the Bank Islam Malaysia. You see now the time gap. And therefore, when Malaysia started the operation of Islamic bank, one challenge facing Islamic institutions is how to be competitive. You'll find how the government of Malaysia provided a lot of incentive for the industry to develop over time. For example, Malaysian government channel huge amount of government money by appointing Bank Islam as the official bank for the government transactions. This is just to make sure that the newly established Bank Islam could have enough liquidity to run its operations. Besides that, the government also slowly introduced the Islamic services, Islamic finance services through Windows. First, we have Bank Islam, but then the government became more open to allow conventional banks to have windows like Maybank. They have a specific counter to handle Islamic finance transaction without the bank itself need to establish a specific operations under Maybank Islamic. Maybank Islamic came much later, became requirement for conventional bank that wanted to offer Islamic financial services to separate their conventional financial services. They need to separate their conventional financial services with the Islamic financial services. Therefore, today you can see Maybank Islamic, Hong Leong Islamic. You can see different branches opened under the name of Islamic Hong Leong Bank or Maybank Islamic and so on. This development came much later. Realize here that when we say Islamic financial institutions, this entity is a profit-oriented institutions. Now they have how to achieve this objective, profit maximization objective for the Islamic financial institutions. This is unique because the Islamic financial institutions must avoid riba. And note that riba or interest is the core source of income to conventional banks. When we establish Islamic financial institution, this must totally be abolished. How to use Islamic contracts to facilitate financial activities using mudarabah, musyarakah. These are among common types of contracts used to structure the Islamic products, to structure the Islamic financial products, such as housing loan, which later we will discuss. Besides using this contract, since interest or riba no longer allowed for the Islamic financial institutions, they also need to find other ways to increase their revenues and therefore their profits, such as through rental activities and consultancy and many other sources of revenues that they can think of in order to generate revenue to their operations. Here I want to discuss about the scope of riba in financial system and realize that the current operation of Islamic finance is not fully addressing the entire scope of riba that exists in the financial system. When we say riba or interest, at the moment I just translate riba as interest to make our discussion simple. The essence of interest is based on the concept of positive time value of money. And in finance, we have this formula in order to calculate the future value of our investment or saving, for example. It is given by the present value times 1 plus I is the interest rate, to the power of t. T here should be subscript. So this is the formula to calculate future value. And if you save your money in the fixed deposit accounts in a conventional bank, over a certain period of time, the money will grow due to the compounding effect of the interest rate. This is the basic idea of interest. Besides that, interest also is used in loan when conventional banks provide the loan services to their customers. For example, the modern financial system today is based on the fractional reserve system. Means that the current banking system today would supervise activities of other banking institutions. And one way how central bank can control liquidity in the economy is by adjusting the reserve requirement, the chapter about monetary system, RR or reserve requirements. By controlling the reserve requirements, then this would limit the ability of commercial banks to offer loans or credits to their customers because commercial banks could only lend out the excess reserve available to them. According to some Islamic scholars, the money creations by commercial banks based on the availability of the excess reserve, this is riba. This is one big element of riba. However, if you can recall in your textbook, you learn deposited $100 to Bank A, then Bank A must send the required reserve to central bank. The balance is the excess reserve to Bank A, and Bank A issue loan by issuing check. Then this check goes to Bank B, and then the cycle continues, where then you calculate the monetary multiplier, and you can see just from $100 as our earlier example, the entire commercial banking system can expand the amount of money created out of the thin air, and according to Islamic scholars, constitute the element of riba because money expansion happen out of the thin air. Another element of riba that exists in the modern financial system today is the fiat money system, where the fiat money is when the face value of the money is the stated value on that notes. If you have your 50 ringgit notes, then it is stated there, and we are obliged to accept these notes, and this is done by law, the concept of legal tender, where by law must be accepted. In Malaysia, you cannot say you don't want this money because it is accepted as the legal tender to facilitate transactions. This is the face value. But in order to create this 50 ringgit note, the cost is very low. Let's say, so 50 ringgit minus 10 cents, the balance is 49 ringgit 90 cents. This is the profits of making money to the bank. This profit is also known as the seigniorage. They are utilizing the seigniorage. And this is the advantage of central banks and other commercial banks when they have the power to create money. And this money creations is again under fiat money system. Some Islamic scholars consider this to be a form of riba because there is no fair counter value in the creation here. And then scope of riba that we can see in current financial system today is that the current system is based on interest-based system. For example, banks lend money for guaranteed interest. When someone get loans to buy a car, together with the loan, the bank would charge the interest rate. And this is riba. When we look at these three scopes of riba in the modern financial system, the current models of Islamic banks today, tackling the third one, where we are using Islamic contracts to offer Islamic financial products such as Islamic car loan, Islamic housing loan, Islamic credit cards. That is, I would say, the lower level in this scope. Fiat money as given. Yes, definitely there are Muslim scholars who would say that fiat money is permissible. But here I just want to alert you that don't be surprised when you come across some opinions saying that fiat money constitutes riba. And another serious issue related to the modern financial system today is the first scope, that is the idea of central bank, with the fractional reserve system. So this is another point that you need to be aware of. When we discuss about Islamic financial system today, most of the time we talk about creating Islamic financial products, the third scope there. We are very much silence and not much discussions related to the first and the second one. I would say this is a good book for you to read in order for you to get a basic understanding regarding the prohibition of riba. Assalamualaikum.